Hey, this is Matt from InvestiQuant. Today is Friday, October 9th, 2020. This morning we saw the markets gap up above all of the recent highs for the week after yesterday's strong session. And since then, we've seen some divergent action. So if you look at the charts here, I've got the S&P in the top left, the Russell in the top right, the Dow in the bottom right, and the NASDAQ in the bottom left. And after the open, you can see that the S&P, the Russell, and the Dow all pushed lower, but the NASDAQ did not do the same. NASDAQ has kind of been trendy higher almost the entire session here, whereas the others kind of sold off and consolidated a little bit. And then this afternoon, you can see some large bars showing up on the charts here, where we had some news come out that sparked the market to move higher. And what I want to look at this afternoon is what has happened historically when you're trading up at recent highs on a Friday. So ahead of the close on Friday, what has happened when you've got a strong session and holding up strong relative to recent days. So let me go into Discover, and we'll look at the indices here. You know, we do have other instruments and different asset classes I don't always show, but we do have interest rates, energies, metals. So if you're like a gold trader, you can test gold in here. We've got equity ETFs, which would be like the spiders, the Qs, the diamonds, and the IWM. And we've also got sector ETFs. But for this example, we are looking at the indices, and I am using the futures here. So I've got the S&P, the NASDAQ, the Dow, and the Russell selected. I'm going to use an intraday time-based entry that's going to be getting long at 2:30 p.m. Eastern Time. It'll exit at the close, which is 4:15 p.m. Eastern Time. And next, I'm going to go into the post-open filters, and this is where I can add a little bit of context around the price action that we've been seeing so far today. And what I want to use from this section is I want to say that as of 2:30 p.m. Eastern Time, since that's the setup time I've used, I want to say that we're trading above a 10-day high. So if I hit equals for greater than 10-day high, that means we are trading at highs at 2:30 p.m. Eastern Time. And then I'm also going to add a little bit more context and just say that it is trading in the top half of its intraday range as of 2:30 p.m. Eastern Time. Of course, I have no idea if we will be there at 2:30 p.m. Eastern Time, but currently we are in the top half of the range in pretty much all of these markets. So next, I'm going to go to indicators. And I'm simply going to add the 200-day moving average. And lastly, I'm going to go to the calendar section, and I'm going to say that today is Friday. So let me hit equals next to Friday, and then view results. And here we go. So these are the results of going long at 2:30 p.m. Eastern Time on a Friday when you're trading at a 10-day high and you're trading in the top half of the intraday range. This is happening while above a 200-day moving average. Now, historically, we've got 92 samples in the S&P, we've got 85 in the NASDAQ, 90 in the Dow, and 76 in the Russell, dating back to 2003 for our start date here on this test. And if you look at the win rates on them, they are all very similar, 59 and 60%. Almost exactly for all four of these. So the S&P coming in 60, NASDAQ 60, Dow 60, Russell 59%. So historically, these have had favorable win rates there from 230 on. And if we look at the average win to average loss, the average win in the S&P pretty similar to the average loss size. Same with the NASDAQ. The average win and average loss are pretty similar. That is also true for the YM and the Russell. So all of these fairly similar average win and average loss, but the win rates are all skewed a little bit on the bullish side here historically. And let's take a look at the results distribution for the S&P. The way this chart is laid out is you've got the sample size on the vertical axis. So the taller the bars, the more sample sizes that are within them. And in the horizontal axis, you've got the results by dollars. And this is based upon trading a single contract of the ES. The farther you move to the extremes on the left or the right, the larger the move has been historically. You can see we are blank over here. There's no bars on either far extreme. If you look at the middle here, we've got the zero line. So this would be very small trades happening right next to that, and that's where the bars are tallest. So you've got two green bars here. This is about 2 points to the upside. The next one is 4 points to the upside. And then the tallest red bar here, this would be 2 points to the downside. And then the 4 points to the downside would be the second one right here, which is not nearly as tall as the one 4 points on the upside here. Outside of that, you can see the result distributions really drop off. There's just a couple samples here on the larger moves, but none of them are kind of extreme moves. This has historically been pretty balanced as far as results go, where they're usually getting a small result, either positive or negative. But historically, the longs have done a little bit better on this setup. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next week.